CIO Equities. Along with him, Bhavesh, who is our co-head, factor investing and fund manager for our SIF investment schemes also. Also, we have Deepak Jain, who is president and sales head at Edelweiss Mutual Fund. He will also help you out in terms of understanding on trends which is happening in mutual fund. So lots of things we are happy to discuss with you. I will hand over to Radhika. She will give you an overview on how we have grown in this particular year and last 3-4 years, and a new asset class like SIF, Altiva SIF we have launched earlier this year, along with Gift City, for which we are here.
We are all here as Edelweiss Mutual Fund for a large State Connect event that maybe Deepak can talk about later more. So we have a large event, for our distributors and partners in the state later tonight. So we are all very excited to be here. Of course, this market is one of the most exciting and equity savvy markets. So there is always a reason to be in Gujarat. I think I have been to Gujarat state at least once a month this year, maybe more than that. And our branch presence across the country continues to expand, but perhaps most aggressively in the state of Gujarat. So that we're very excited about. I do want to keep this interactive, and there are multiple speakers, so I will not take long. I'll just maybe give you some headline initiatives and statistics, ask my team to chime in, and I think the maximum value is in all the questions that you guys have for any of us on really any topic that there is. So I think if I look back at 2025, we are looking at closing the year. While it's been a volatile year on the equity market, I'm sure Trideep will talk about that. It continues to be a good year for the mutual fund industry. Edelweiss Mutual Fund continues to grow from strength to strength on total AUM and particularly equity AUM. As we stand today, we are about 1.65 lakh crore of total AUM, spread across equity and fixed income, but equity is now larger than fixed income. And I think in the last few years, the category that we've seen real growth in is equity, hybrid, etc. So we are also happy to see that. This asset base is spread across 30 lakh folios, and again our folio count must be one of the fastest growing among major asset managers in the industry. So that's a headline picture of the business, and we are present in about 58 locations as of today.
The first thing that I would like to say about calendar year 26, that I am reasonably confident that India would outperform global markets in 2026. That could mean in terms of higher positive returns than global markets, or maybe if it falls lesser than the global markets overall. This is driven by the fact that India has underperformed this year for a good while. Valuations are reasonable relative to the globe, and that makes me feel that overall India would outperform global markets in calendar year 26. That's number one. Second, I think this will be driven by three factors. First of all, after almost year and a half, we are seeing the beginning of earnings upgrade cycle in India. As that migrates through calendar year 26, we would see better earnings driven upside in the markets to come through, and that would be genuinely good for Indian equities. Just as a data point, we have been in earnings downgrade cycle for the last 12 to 15 months, which we are in the process of reversing. So that's the first reason why I think overall India could outperform globally as well.
We have launched our first SIF, which is Altiva Hybrid Long Short Fund. Again, expanding the basket of hybrid products we have. The intention over here was very simple. Today, as an equity investor, I have multiple options. If I am an aggressive investor, I can invest in AIF, PMS, small cap fund, mid cap fund, a lot of other options. If I am a conservative equity investor, again, then I have balance advantage fund, equity saving fund, multi-asset fund, and so many other options. But for a fixed income investor, the choices are very little. Earlier, I used to put my money into fixed income fund. The taxation has gone for a toss over there. Again, related categories like arbitrage or income plus arbitrage fund of fund, which was an alternative to fixed income, is still doing better, but again having an impact of interest rate cut. So returns are lower over there also. Then coming to all other hybrid funds, whether it is equity saving, balance advantage fund, all of them have some component of naked equity, and that's why equity related volatility is available over there also. We have seen during COVID fall, a lot of hybrid fund also were down anywhere between 10 to 30%. So that is where we thought that the whole this concept of SIF can help us to bridge this gap by launching a product where, like in global context, we have hedge fund. We can have an absolute return fund strategies over here, which will target arbitrage plus 2 to 3% return on a post-tax basis. We started this fund in first week of October. In our NFO, we collected around 310 crore. Today, as we speak, we have crossed 1,000 crore. So that clearly shows a lot of interest from HNI, ultra HNI, a lot of family offices and corporate treasuries to invest in a product where they can actually generate 8 to 9% post-tax return without taking meaningful equity risk. The biggest part over here is risk-adjusted return. Right now, you will see there are very limited options available. Tax-free bond are also not yielding great returns. All your fixed income mutual funds, either because of 125 basis point rate cut and taxation, are still not able to deliver better tax-adjusted return. So that is where our SIF becomes a very strong product.
I'll compare last 12 months with the previous 12 months in terms of investor behavior, flows, etc. Also what Radhika mentioned, why we are here. We are here to talk to our partners from across the state of Gujarat. Just to give you some sense with regards to how big is the state in terms of mutual fund assets and distribution penetration. The entire industry today is roughly 80 lakh crores, out of which close to 6 lakh crores is Gujarat alone. But if you look at equity assets, and Gujarat is known for taking more risk and equity investing has been very cultural. So equity is roughly 40 lakh crore, out of which almost 3 lakh 70,000 crore, 3.7 lakh crores is Gujarat, almost 9%. If you were to compare that with the GDP figures, so it will be close to 9%, and industry AUM is also close to 9%. Interestingly, even the distribution penetration is close to 9%. Gujarat is the second largest home for mutual fund distributors and customers. For Edelweiss also, it has been a very gratifying journey. We started with only a small presence in Ahmedabad, but today we are present in 8 locations, and by the end of this year we should be present in 2 more locations. So covering almost the length and breadth of Gujarat.
I'm Rafat Kadri.
Hi.
Hi. I'm editor of Bilkul Bazaar, an English news portal. I have 2 very simple general questions. One is, what brings you to Gift City? Are you really feeling gifted? And and how are the couple of years that are going to unfold? How do you see your business? Secondly, my personal question is to Radhika.
Yes.
We are so proud to see you, a woman leading a finance industry and a former shark. So please share what has been your mantra for this success.
Okay. Thank you. So on gift, I think time will tell whether it is indeed a gift and we've been gifted. But no, look, I think before, people like us who were to set up vehicles which were dollar-oriented vehicles, we either had to go to Luxembourg or Ireland or Singapore or Mauritius. And all of these jurisdictions had their own challenges. They were expensive, and most importantly, they were not our own. And I think the fact that you have created an international trade center in India is a very, very good thing. So, and it is at least my hope that GIFT grows both in strength, size, and also credibility with global investors who are putting money into India. So that is our rationale, that if we have to create an offshore jurisdiction or a place where we can offer dollar solutions both to NRIs and to domestic investors, why not GIFT? I think for the large part, the regulator has been extremely cooperative in helping us setting up our branch and getting our products launched. There are also certain taxation benefits that we get both as an asset manager and that the fund gets out of GIFT, which I hope will be sustained. And I think it's a little too early to tell what the business will be like. We do believe that both offering global products for Indian investors and India to global investors are meaningful markets. But some of these things, as I said, are investments. Like a few years ago, we made an investment in building passive equity funds. It was a small business today. Now, then it is a meaningfully large business. So some of these things I think you don't do for immediate scale. You do to be ahead of the curve, and we are one of the first managers to have both a GIFT and SIF license and presence actively. In fact, I think we might be the only one to have both sides of the GIFT business and the SIF business live this year. So we're happy about that. Thank you for the kind personal comment. I have no mantra. We are all figuring out life, but I think India and the MF industry have been very, very kind with opportunities. So one is trying to make the best of them.